It's Mike at Cross Country Mortgage, and it's time for your Monday morning mortgage update for the week of Monday the 26th, but it's Tuesday the 27th because yesterday was Memorial Day. We just got all done with a 3-day long weekend, and I hope you had a wonderful weekend and remembered why we celebrated this weekend yesterday, the sacrifices that have been made for our freedom. How can you put a price on that? Amazing. So what happened last week? What's going to happen this week? I always try to give you insight as a mortgage professional in this business for over 25 years, give you some insight on what is going to happen this week in the market. How might it impact your decisions on buying and selling property, locking or not locking interest rates, pricing on loans, et cetera, et cetera. So what happened last week? Last week we saw a little bit of a sell-off in the bond market. Means money flowed out of the bond market. Let me show you the graph here. Money flowed out of the bond market and mortgage rates got up a little bit. So if we look at the right side, this is a 6-month representation of the trading of mortgage-backed securities in the bond market. Remember, people put their money in one or two places: the riskier stock market or the safer bond market. When everybody's feeling great and positive and consumer confidence is high, money flows into the stock market. Everybody's willing to take more risk, and it flows out of the bond market and mortgage rates go up. On the other side of it, when consumers don't feel good about the economy, they don't feel good about how much they're going to pay for things and their future jobs, et cetera, money flows out of the stock market into the safer bond market and mortgage rates come down. The other part of this is inflation. High inflation means higher rates, and that's obviously the thing that we've been dealing with for a long time. Is increased inflation is why we're seeing rates in the 7% range, high sixes, low sevens. So what are we looking at right now? Let's go to the right-hand side. You can see today is a nice rally. That green candlestick means money's flowing into the bond market and rates are improving. If you look at the top right, 36 basis point improvement just today, and that wipes out the losses we had last week. A 34 basis point sell-off last week, all of last week, Monday to Friday, and a 36 basis point improvement today. So this just gives you a representation of the volatility in this market. I get questions all the time from agents, from investors, from my clients. Should I lock? Should I not lock? We've been in if you're in contract, if you're refinancing house, don't play the market, lock your rate in, because one day could be good, one day could be bad. And unless you're managing that market literally on a minute by minute, hour by hour basis, you're going to take more risk in losing than you are in floating and trying to play the market. So just keep that in mind. If you're in a position to lock your interest rate and your lender is telling you to float, lock. Also make sure your lender's paying attention to the market. If they're not paying attention to it, 2 or 3 days go by, you could lose thousands of dollars. If you need any insight, I'll be more than happy to help you. Just let me know. So let's look at why did the market move last week? Why did it sell off last week? The big, beautiful bill. It passed the House. It's now in the Senate. Senate has to decide. And that big, beautiful bill is positive news for the future of the economy if it passes. And so money flowed out of the bond market into the stock market because that's a positivity for the economy. What are we looking at this week? 3 things: political, geopolitical, inflation, and the consumer. So geopolitical, more about the big, beautiful bill. It's in the Senate. Are they going to pass it? Are they going to water it down? Really, what's going to happen? That's going to impact the market this week. Tariffs, every week we're talking tariffs. Now, we've seen a pause. China, Trump administration paused the increased tariffs on China, which means they're at the table talking about this. They just paused increased tariffs with the European Union. That means they're at the table talking about this. And our Treasury Secretary has been floating news that maybe India, we have an agreement with them, and other countries, we haven't seen that, but is that going to come out this week? So why did we see the rally today? Geopolitical, because Japan announced that they're going to put fewer long-term bonds out there, like 40-year bonds that they've been doing, very unique. And this was positive news for the global bond yields around the world. Our bond market is the #1 invested in bond market in the world. Money flowed into it today because of the announcement from Japan, and that's why we're seeing this great rally today. Hey, we'll take it. Will it last? Time will tell. So second thing is inflation. The PCE report coming out Friday is the Fed's #1 report they pay attention to when they set policy on if they're going to raise or lower rates. And that's coming out Friday, and it's expected to go up slightly. If it hits expectations, we're not going to see a real difference in the rate. But the real thing that's coming out this week is consumer income and consumer spending. This is a big deal because this is inflationary. If we're spending less and paying more for stuff, that's inflation. That's not good for rates. And so really the spending reports that are coming out and the tariff news on pricing is going to be impactful. Third thing is the consumer. So two big reports coming out. One already came out today, and that was consumer confidence, which really gives a snapshot of how the consumers feel about employment and labor. And then Friday is sentiment, consumer sentiment, and that really is about consumer finance, what the consumers thinks about business conditions and the overall economy. So consumer confidence already came out today, and it came in much stronger than expected. This is also good for the economy because this means that it's good. The consumer feels that the good news on tariffs, good news on trade deals, all good for the future of the economy. The pause in tariffs with China, the pause in tariffs with the EU, all this means lower inflation. All this means lower inflation, and that's positive for mortgage rates. Okay, so even though this means good news for the economy, the lower inflation component of this consumer confidence report is much stronger than the positivity in the economy, which technically can raise those rates. So sentiment's coming out Friday. Again, another big deal. If we get a weak sentiment report, that means we're basically seeing a slower economy and higher inflation, and that's stagflation. I've talked about this before, and that's not good anywhere. So we're paying a lot of attention to the PCE report coming up Friday and the consumer sentiment coming up Friday. So if you have any questions about your rate, your loan, your mortgage information, I am a mortgage professional. I've been doing this 25 years. I'm more than happy to give you some insight, help you, give you a second opinion. Let me know if you know somebody can benefit from this video. Please forward it to them. Hope you have a great, productive, short week, and have a great day. Bye-bye.